Hi traders, thanks for joining me in this weekly analysis. It's the 1st of March, Sunday 1st of March. And boy, it's been a pretty crazy weekend, what with Trump waging war together with Israel on Iran, and lots of strikes going on. Going to be sending the markets, has to be said, into a bit of a tailspin when the market opens tomorrow, well, tonight. I think we are going to have all eyes on oil to see what goes on there. It's currently at 67.28, but I think we can fairly expect it to gap up pretty hugely and maybe even start somewhere around here, 75-ish. And over the course of the next few weeks, depending on how things go, I don't think it's unrealistic to expect oil to be well up into the hundreds, maybe even 120 again, somewhere around its previous highs around here. The issue with that is obviously that puts pressure on all sorts of things, consumer goods, transport, and that has a knock-on effect with inflation, rising inflation, which was just about starting to become under control. So higher inflation means less chance of an interest rate cut, and ultimately what it means is that it's likely the dollar will creep higher, I would imagine. It's always really difficult in times of conflict, as we've seen recently with Russia and Ukraine, to have to talk about the practical and financial implications of all of this. Clearly, the biggest concern is the human side of things, and the potential loss of life, which obviously none of us want. But if we are going to be actively involved as market participants, it is our job to navigate that with the best risk strategy possible. And I am certainly no macro trader. I'm not a fundamental trader, but there are certain core principles which I think need to be observed, especially in situations like this when there's an international conflict. So it's just something that we need to be aware of. For me specifically, I've got two positions on currently. I've got let me just go to the 4 hour. I've got the pound yen, which in my last video we were starting to just monitor closely and seeing whether or not it would sort of line up with what we're looking for. It did. We got a lovely bearish engulfing candle coming down off here. On the weekly chart, the pound yen actually is formed a double bearish divergence. As you can see here, prices moved up from here to here and here to here, whereas on the MACD, for that same period, the momentum is showing that it should be heading down. This isn't necessarily a reason to mechanically enter a trade, but it is something that I look for, just a signal that it's possible you might get a counter trend move. And obviously the trend has been going up pretty steadily. So at this horizontal key level that we've got marked here, we got a sort of doji candle which shows a possible reversal, and then we got a bearish engulfing candle, and then we got another really good one here off the 200 moving average, which for me was more than enough reason to get in on this trade. We put our stop losses, both of them, because I take two starting entry points, both of them above this horizontal key level, above that last swing high, and let's see what happens. There's also a trend line now in place on the 4 hour. Whether or not that is observed, we will see when the market opens shortly. The MACD has crossed down. That was the other thing. There were so many reasons to enter this trade for my system. That's where we're at with the pound yen. This one is a slightly more confusing situation because I've got the US dollar. I've got short exposure to the US dollar. I'm selling the US dollar Swiss franc. So if the dollar does spike, this is not good for my position. So I will have to look at this very closely. Maybe bring in some tight stop losses above here. Allow myself to be stopped out and just monitor things until they stabilize. It's a shame because this was a nice setup, but it is what it is. I have no emotional connection to it, and it's just a pity. Conversely, I was sat on the bench as to whether or not to trade the euro US dollar. It's been up and down. I should be looking for longs because the weekly MACD is telling me that the histogram is bullish. But frankly, I think, you know, with the US dollar strength, we're looking at probably taking a short next week. Not this coming week, but the one after. We will see. So those were the three that were on my short list. Now, let's just open the weekly charts and go through the rest of these currency pairs quickly and just see where we're at. So we're looking to take longs currently on the Aussie US dollar. It's been on a complete tear. For everybody that's been enjoying this ride, it's possible that that's going to change now. I could be wrong, and we will see what happens. But if the dollar does strengthen, it's going to flip reverse a lot of these relatively sort of long trends that we've had. Other than that, I don't have many other comments to make on the Aussie dollar, US dollar, because it's a long way away from me being able to trade it. Pound dollar. This one is one that looks like it's about to go. To be honest, this is one that I could end up trading sooner rather than later, because the weekly MACD will very soon enter negative territory, and we are at a horizontal key level on the weekly, which could provide a good basis if the price starts to move through these moving averages on which to trade. So just having a look at this. Yeah, we'd need a cross of the MACD to the short side, and then we would have to, you know, see where we're at. But currently, there's nothing on for me showing. Here we go, US dollar, Japanese yen. Again, I should be shorting it. If there's dollar strength, I'm on the wrong side of that market. For me, for my strategy at least, where I have a weekly MACD as a trend filter, it's basically naturally keeping me out of the markets. So I'm not too worried about trading any of these. We've got the US dollar CAD here. Again, I should be short that. Basically, what this conflict is doing is putting almost everyone who is following the trend on the wrong side of the market. So it's going to be an interesting week watching people. Do they scrabble around, try and trade themselves out of it? Do they take their loss and sit on their hands? What do they do? Personally, I prefer the latter. Take your loss, take your lumps, and sit on your hands and wait. You know, there's plenty of time to make money in the markets. We don't need to be always in the market, always trading. You don't have to be going down in time frames and trying to day trade to make back losses. You shouldn't be chasing anything like that. A lot of people are saying that people will be rushing to gold, Bitcoin, things like that. I mean, if you have got back in on gold, it would have been a perfect time to do that, because the daily MACD has crossed over recently. And yep, you're going to be loving that. Long term, gold is just a brilliant hold anyway. If you follow my system, you'd have basically been long gold since September last year. To be honest, you'd have been long gold a lot. Silver provides perhaps a nicer re-entry point. It's had that slightly deeper pullback towards the 50 daily moving average. You've got a nice cross up of the MACD, and you've had a bullish engulfing candle on the Friday. Pretty good. Okay, so that you know, it might feel like I'm just sort of glossing over these, but it's because ultimately I don't want to be taking precision entries. We're not in a normal market that we're entering. It's going to be, am I in or am I out? I'm not going to be looking to take many new positions. I'm probably looking to only ride new positions that go well for me, or, you know, get the heck out of Dodge, as it were, and then just wait and let it sort of subside. Which is frustrating because, you know, we want to trade, we're traders, we want to be in the markets. But I think for me that covers off my analysis of, you know, anything that I'm looking at. So that's all really for me in this Sunday. Hopefully March is a good trading month for all of you guys. I hope that if you or your family are trapped anywhere in the conflict zone, that you're able to stay safe and hopefully get to some refuge, and that this doesn't last for too long so that you can get back to normality. That's all from me today. So hopefully that's been useful to you if you're watching any of those currency pairs, and if not, then I'm sorry. But there isn't too much else to be looking at right now. We really just need to see what happens in the markets. All right, guys, if you've enjoyed the video, then please do hit subscribe, stay in touch with more of the updates, hit the like button for more content like this, and I will catch you in the next vlog. Bye-bye.